All right, welcome to Build Your Trade Plan, Part 2, the trade rules. So today we're going to get into the rules and strategy sizing. So far, what we've looked at on building our trade plan is we've looked at our goals, we've looked on how to set up our Greeks, we've looked at the types of risk that we're willing to engage in and put on. Next is setting our trade rules and sizing by strategy, some of the things we've talked about already. So let's get into that and get rolling on this piece. So trade rules, we've got a good number of them here. So I'm going to start. I'm just going to go through them slowly with you. Number one, plan your trade and then trade your plan. Never trade without a plan for exit and entry. You've got to have a plan. You've got to have a plan for strategy, and you've got to have an entry and exit plan for every single trade, and you got to follow it. Okay? Never, you know what, I'm going to let it go a few more minutes. Never, it'll recover, it'll bounce. None of that stuff. You trade your plan and you plan your trades ahead of time. Next one here is never modify or break. This is key. Never modify or break the trade rules during a trade. We're not going to modify or break our trade rules while we're trading. Okay, stay in the trade, stay with your rules. Don't modify them during the trade. If you find a better way, modify it afterwards, come up with a new strategy, and then play by those rules. Number three, stay mechanical and trade without emotion. I think that's one of the things I feel I'm really, really good at, is being extraordinarily mechanical and trading without emotion. I don't get upset at losses. I don't get excited on winners. I'm pretty calm, pretty mechanical, just letting it do its thing. You win, you lose. And the goal here is if you put together the right plan and you trade it properly, you're going to win. Okay. But it's only when you stay mechanical and trade your plan. Don't be chasing the shiny object, the newest things, the newest trend. Stay away from Facebook groups, all of those things. Just find your own trade plan and work it, and don't be chasing other people's strategies or try to trade every strategy. Even if it looks like they're working and people are posting wins, you know what? Those people don't last very long. Number four here, never chase the entry. There's always going to be another trade. Okay, so never chase the entry. If it gets away from you, don't chase. Let it go. There'll be another trade, but don't try to chase the entry. Number five, if I have to ask myself whether I should be in that trade or not, then get out of the trade. I see this constantly in the Discord group. Hey, are you going to close this trade? Should we get into this trade now? Should we stay in? Should we close it and take the profit? You know what? If you have to ask whether you should be in the trade, get out of it. Okay. It's a fantastic rule that'll save you guys thousands and thousands of dollars over the long haul. Again, if you're not sure and you have to ask whether you should be in the trade, get out. Number six, huge one here, never revenge trade or try to show the market that it's wrong. Accept the fact that the market is always right. Okay, the market's always right, even if your trade's wrong. Okay, never revenge trade. Don't try to get that money back that you lost 10 minutes ago on something. Just let it go. And then number seven here, never average down or add to a losing position. Only add to winning trades up to the maximum portfolio size or so on it, and make sure you respect your max allowable loss. But don't average down, only average up, and only average up to your maximum portfolio size on a trade. So don't average down. There's a reason the stock is driving down lower. Yes, once in a while it's going to work, and you can say, hey, I told you so. I averaged down and it turned out to be a winner. Most of the time you're averaging down, it's going to be a loser. Okay, number eight, there's nothing wrong with closing a winner. Okay, getting back in is just another trade away. So again, if you have to ask, should I hold it, do this, that, you know what? If you got a winner, it's okay to close it and get back into another trade. I do want to preface that with, I stick to my rules pretty closely. Okay, Now, if I want to close a winner for various reasons, it's okay to do so, but I really stick to my mechanics. If I'm looking for a 100% or waiting for something to expire, and that's the way I played that trade, I'm not going to typically close it early. I'm going to ride it out to get the maximum value out of that. Number 9 here, holding on to a position overnight is the same thing as buying that stock or option at the end of the day. It's a great little rule that I picked up along the way here. But if you're going to hold trades overnight, it's the same thing as buying them at the end of the day. If you would not buy a trade or buy into a trade or make a trade at the very end of the day, then you shouldn't be holding it overnight. Okay, simple as that. If you're not sure, you're afraid, any of those things, if you wouldn't buy it at close of day, then don't hold it overnight. Number 10 here, if I have more than 2 losing trades in a day, stop trading. Okay, don't revenge trade. And if you've got 2 losers in a day, the day's just not yours. It's okay. Live to fight another day. Stop trading. That's a valuable rule, especially for people that might be day trading or really active trading. I don't place that many internal trades in a day. I'm not day trading, so it's really not a huge rule for me, but I do find it can be valuable. Number 11, never take a trade just because you're bored or you're looking to trade just to trade. You're bored sitting around on your computer watching the market, and yeah, I got to put something on. You don't have to put anything on. Don't take a trade because you're bored. Simple as that. That will save you, again, thousands and thousands of dollars. Number 12, track every trade by strategy. I have a trading spreadsheet. I track every trade manually, and I then also track them by strategy. Okay, every single trade is tracked. I do share them with you guys at the end of the day, but I also track them by strategy as well. I track everything on there. And then number 13 here, reconcile trades on a weekly and monthly basis. I look at all of my trades. I look at strategy for every single strategy I have. What's winning? What's losing? Why did I fail? Why did I win? I'm analyzing every week, but really I'm analyzing every month too, looking at overall, how are the strategies working? Do I need to make a modification? Or is it playing out as expected? Number 14 here, hope is not a trading strategy. If you find yourself hoping the trade moves in a certain way, then exit the trade, okay? I need it to move. If you need it or hope that it's going to move one way or the other, get out of the trade, okay? Hope is not a strategy. Number 15 here, let the probabilities work by consistently placing trades over time. Let me go back to my initial rules of consistent, mechanical, and repeatable, okay? I won't trade it if it's not a strategy that's consistent, mechanical, and repeatable. You have to let your probabilities work, okay? You've heard trade small, trade often. You know, I don't know how small you want to trade, but trading often allows you to consistently place trades over time. You're going to have some losers based upon expectancy. If you're placing trades that have an 80% expectancy rate of win rate, fine. If you're going to lose 1 out of every 5 trades, it's all good. Just because and if you lose 2, great. Hopefully you'll win the next 9 or so, or next 8 or so. Okay. Let the probabilities work by consistently placing trades over time. I see this all the time in zero DTE traders. Is they run into a string of 2 or 3 losses in a row, and they quit the strategy, go to something else, which works for a little bit, and then it loses. And overall, they've just blown up their portfolio because they can't stay in the strategy long term. You got to be able to weather the storm. Number 16, this is a strategy that I came up with many, many years ago, probably a decade or 2 ago, but hedge only what needs to be hedged. Just placing a bunch of hedges on your trade because you think the market's overbought doesn't make sense to me. Hedge what needs to be hedged. Certain trades don't need to be hedged. Defined risk trades, there's no reason to hedge them. They're defined risk. If you sized properly, you can lose the whole trade. No sense hedging those trades. If you've got a lot of naked puts or naked calls or something on, okay, then maybe you need to take a look at hedging it. Do you have a stop loss on those? If you do, and you're okay taking that loss and taking a bunch of losers on your trades, if it's not going to hurt you because you're staying within your plan, you don't need to hedge it. Hedge stuff that needs to be hedged. Otherwise, don't hedge just to hedge. Okay, you're going to end up burning your portfolio up with needless expenses. Hedging is an expense. You don't make money on hedges. If you're making money on a hedge, it's a trade, not a hedge. Okay, hedge only what needs to be hedged. And 17 here, just my core rule, keep it simple. Simplify to multiply. You can't grow when you're doing too many complex things in a row. Simplify to scale. Simplify to multiply your income. Okay, keep it simple. I can't deal with complex trades and complex adjustments. Not something I want to deal with. I don't want to work that hard. Okay, I want to keep it simple. All right, so those are my 17 trade rules. You can write those down. At some point, I'll post them up in maybe a Word doc or something like that, which I do keep in my trade plan, and I do share it with folks in the Discord as well. But 17 trade rules, post those up, follow them, and I guarantee you'll be a much better trader just by following the rules. All right, I want to wrap up this part 2 of building your trade plan by getting into sizing by strategy. All right, so let's talk briefly about that. We talked that our goal of monthly income was 3% of our net lick. I also talked already that no strategy is to use more than 30% of the max allowed buying power available. I've talked about the fact that because I do trade a lot of futures and options, but mainly futures, because of span margin, I won't use more than 50% of my buying power available. That's my maximum. And it doesn't mean you have to be there, but that's my maximum, and I'm pretty comfortable around there with the size account I have. So in this example, let's just say we have a $250,000 account. That means you would have $125,000 max available buying power to use. In that case, no strategy would get more than $37,500 in buying power to use total for all of the trades in that particular strategy. Okay, so I hope this makes sense. So I'm not all in on one strategy and not a one-trick pony. There are multiple strategies here. There's not 50, okay? There's not 20, there's not 10, okay? But there are a handful of strategies, and primarily I'm going to use, 5, 6, 7 strategies for the most part over and over, but I have 3 to 4 core strategies, which I'm going to get into in the next video. So let's take a look at how I would size by strategy on an account here. So I'm going to take the fact that this is let's say a $280,000 account. For the Income Navigator portfolio, as part of the Mr. Toptic, I trade this size portfolio. So I trade a $280,000 portfolio in this instance. So the goal here at 3% would be $8,400 a month in income. The max BP that I would use would be $140,000, which means no strategy should get more than $42,000 in buying power, or should you really use more than that? And let's take a look at some of the trade strategies that I'm using. The first trade strategy that I use is I do a 90 DTE strangle on both ES and gold futures. I do one on each of those every single week. So I'll have 4 maximum ES strangles and 4 gold strangles on at all times. I put one on every Wednesday. I take the most profitable one off every Wednesday after I put one on. For me, that generates around $1,100 in weekly income, okay, which gives me about $4,400 a month. Total BP for this trade is $25,000 in this portfolio. Okay, so it's going to use about $25,000 of BP, which is under the 42, and it generates about $4,400 in cash. It's probably my core strategy of making money with a great win rate and pretty mechanical, pretty repeatable, pretty easy to use. Next strategy here, my favorite, the one I came up with here, is the long-term 1-1-2 trade. So I invented the 1-1-2 trades a couple of years ago off of a 1-1-1 trade. They've been great, but I really have moved to the long-term 1-1-2 trades. In this size account, I might have 4 on at any particular point in time, and I typically will use 2 contracts at a time. So technically there's 8 total contracts being used, but let's say you either have 8 total of 1 contract, or you would have, where you do 1 every other week or 2 a month at 1 contract, or you could do, again, 1 per month using 2 contracts. The nice thing about these is they generate about $2,400 a month, which gives me, again, $2,400 a month on about $45,000 in buying power. Yes, that 45 is technically slightly larger than the 42,000 strategy max, but it's pretty close. So I'm not exceeding it by very much there. A small fraction, give or take, when I initiate the trade. So 2 strategies right now using about $70,000, and I'm generating a little over $6,000 a month in my portfolio. Okay, next trade here is I do strangles on futures. I will have up to about 6 of these on at any given point in time. Primarily, I'm using oil, CL futures. I might do the Aussie dollar futures. I might do British. I might do the Euro strangles. So I might do any of those. I might do corn, might do soybeans. I'm not big on hogs, but might do some of those particular things as well. So strangles on futures, I'll usually have about 6 of these on at any given point in time. They generate about $2,000 a month. Technically, for me, they've been generating about $3,600 every single month. I usually take around 5 of these off. I'm being conservative on here, and I'm only taking 4 off a month. These take about $20,000 in buying power as well. You can see how advantageous these strangles are from a buying power to an income level. They're a fantastic trade. Next strategy here would be leap puts, selling puts, leap puts, particularly on SPY, but maybe some other underlyings. I'll usually stack up to 10 of these at any given point in time. They don't generate a lot. They generate about $800 in cash. But $800 a month is not bad. I use about $25,000 in buying power on these trades. Again, it's still a good return. It's not as good as like strangles, and why wouldn't you do more? Because I don't want to overdo any one strategy too much. And I like the fact that leap puts, especially whether they're on SPY or any other underlyings, Amazon or ETFs or something, they're not using span margin. So I'm diversifying a little bit by underlying. I'm not a big diversification fan. I believe you diversify by strategy, but you can diversify a little bit in here. And so it's not all futures trading. And then lastly here, spec trades. These would be any of the other strategies that I might use at any given point in time. I generate about $1,000 a month in cash on those, and I'll allocate up to $25,000 of my BP to do that. So again, you can see here, totally I'm generating about $10,600 a month. I'm using about $140,000 in BP on average. Again, these can fluctuate up, fluctuate down. You're going to have some losses in there. You're going to have sometimes they go longer than 30 days. Okay, so but this is the plan. Okay, so you can see exactly how I size by strategy in this particular plan. All right, so sizing by strategy. And then we covered all of the trade rules here. Post those up, be set with all of those. The next video, we're going to get into part 3. I'm going to break down these strategies more in depth for you. I'm going to go strategy by strategy in part 3 here. We're going to cover all of the different trades. And if you like this video, you felt it was valuable, please subscribe. Please hit that like button. Check us out, and we'll be more than happy to help you get started on your own trade plan. But plan your trade, trade your plan, and keep it simple. All right, everybody, have a great rest of your day, and good luck trading.